we have so many problems in regards to Tesla for the short term. It's not even funny, okay? And the thing you gotta understand is Wall Street cares about the short term a lot more than actually they care about the long term, okay? So what do we have? Oh boy, is this bad, okay? So Tesla just cut prices in China again, okay? For I don't even know how many times they've done that now at this point in time. It's quite a few, okay? Now, China, I don't know, and obviously most of my viewers, you guys live in the United States. My next biggest market outside the United States, it would be, Europe in general. And so, almost no one's watching this video that knows a ton about China other than just kind of like base level stuff, right? What I'm hearing from sources in China, from what I'm seeing from kind of the numbers coming out of China, and a lot of times you can't even believe those numbers out of China. They try to fluff them to make them look better. It's bad. Youth unemployment's, from what I've heard recently, 20% plus, and China doesn't even want to cover it anymore because it's so bad. The economy's in an awful place for China right now. And the reason being is U.S. stacked up way too much inventory on several different fronts. And so nonetheless, that's hurt China in a major way. And China kept their economy closed for far too long. They really had their economy closed for like 3 years. They didn't just start opening back up many of their big cities until this year, right? Like in the States, we moved past Rona like fairly quickly, especially if you compare it to China. And so the Chinese market is extremely important for Tesla. And I'm telling you, the Chinese market is not in a good place at all right now, at all. And we don't know when it's going to recover, if it's going to recover, or what's going to transpire there. All we know is China's a mess. They built way too much real estate over the past number of years. They built these ghost cities that, everybody was supposed to move to. And sure, that produces a ton of jobs in the short term, right? And all this cheap financing of all these massive skyscrapers and stuff like that. But at some point in time, the bills come due. And then when you don't have, massive amounts of people living in some of these ghost cities, it's a problem. And so that's something that, honestly, we've been talking about for years, and it's finally just caught up with China very recently, okay? So that's not a good situation. And the reason this isn't a good situation, it's not just about top line, it's about bottom line, and it's about margins, okay? Because Tesla has big margin issues right now. The gross profit is basically falling off a cliff, okay? That's the best way you can put it. The gross margin has been falling off a cliff. We peaked in 2022 in regards to gross margin. Gross margin, obviously looking at revenue versus cost of sales, right? And so you never want to see any of your companies having a gross margin that's just completely plummeting, right? And when you see things like they're cutting price more and more, we don't know where the bottom is. That's the problem. Like, where's gross margin bottom at? Is it at 18%? Is it at 16%, 14%, 12%, 10%? We don't know. And that's a scary thing. And Wall Street looks at something like that and they're like, yeah, we don't know where the bottom is. But even worse than that is operating margin, right? Operating margin subtracts the operating expenses from the gross margin. So, some people say gross margin is more important. Some people say operating margin is more important. I say operating margin is more important. They're both important, but if I have to choose one, operating margin is even more important. So what's going on with Tesla's operating margin? It's even worse. It's even worse, okay? It's absolutely plummeting off a cliff. We peaked here in, this was around the first quarter of 2022, right? Operating income margin reaching close to 20%. And now we're like kind of in the 10%, a little under 10% range. And this is another one of those. If you keep dropping price, like where's the bottom? For operating margin, like are we headed down to 5%? We don't know as of right now. Okay, and that's just a bottom line, and it's very, very scary for a lot of folks out there, right? Now, in regards to the stocks he bought, I'll be honest, I have some issues with these stocks in my personal opinion, and I'll share what those things are. Now, once again, we don't know if this is Buffett buying these stocks or if this is Todd or Ted buying these stocks. I almost want to put it on Todd or Ted more than Buffett because I think this is too questionable of a decision for Buffett to do at this stage in the market cycle. I'm not really so convinced this is Warren Buffett. I think this is more of a Todd or Ted move, okay? So, in total, Berkshire bought 5,969,000 shares of D.R. Horton, 152,000 plus shares of Lennar, and 11,000 shares of NVR. Those shares are worth $800 million, with more than $700 million of it being in D.R. Horton, okay? Whoo! So I have issues with this, okay? I'm having trouble thinking this is actually a Buffett move, okay? I think this is Todd or Ted. Let me go through my list of issues in regards to this, and it's substantial, okay? One is these home builders have been on a hell of a run, okay? You know, the home builders got set up in a kind of a perfect situation. Real estate prices obviously skyrocketed. You had very low interest rates for a long time there. Then no one wanted to move because they were locked in at very low interest rates, right? And you have unemployment rate at under 4%. You know, you put all those together and it's kind of like the perfect combo for these home builders, and their stock prices have thrived. Their stock prices have pretty much all gone to all-time highs very recently. All-time highs. Not 52-week highs, not like 3-year highs. All-time highs, okay? Now, these stocks have far outpaced many other stocks in the market, including the S&P 500 recently, but there's a lot of issues here, okay? And I mean a lot of issues. So first off, on surface level, you look at stocks like D.R. Horton, it looks like, oh, there's nothing bad here, nothing bad going on, right? You know, they're supposed to grow their EPS, low forward P. Oh, that looks all fine, you know, it looks all great, right? You look at a stock like Lennar, oh, they're growing their EPS over the next few years, expected to, oh, really low forward Ps. It all looks great until you take into account that that might not happen. And this industry is extremely cyclical, okay? Extremely cyclical, okay? First off, interest rates are sky high right now, right? You're looking at a 30-year mortgage of 7+%. And that's if you got great credit right now. If you have not so great credit, you could be looking at 8-9% on a 30-year right now. It's out of control, right? And the thing is interest rates could be in a very elevated place for quite some time until the economy breaks. But at the same time, if the economy breaks, it's not going to be good for home builders. I can tell you that much. We know how that game stacks up, right? So this is something that's working against these guys in a major way, right? Home builder sentiment just broke. Now, this could be one of many, many months of breaking that could go on here, okay? Home builder sentiment dropped sharply as mortgage rates surge over 7%. Builder sentiment dropped 6 points to 50 in August, according to National Association of Home Builders. Anything over 50 is considered positive, right? So we're not even in negative territory yet when it comes to home builder sentiment. That's still likely coming, okay? The share of builders cutting price rose to 25% in August from 22% in July. Don't be surprised if that number goes up considerably, okay? So sentiment is starting to erode. Don't be surprised if it gets far worse, okay? Since 2015, we've been in a great economy. Great economy is an economy where you have less than 5% or less unemployment rate, okay? And whenever you're lower than 5% unemployment rate, you're usually considered to be in a great economy. Just jobs are booming. It's not hard to find a job. If you lose your job for whatever reason, you can go find another job, things like that, right? And you can say, well, right here in Rona, we spiked up there for a minute, and that was not even like real unemployment because the government was paying everybody's bills. You didn't have to pay your mortgage. You didn't have to pay your rent, all that crap, okay? That was not even real. So basically, it's been like 8 years of unemployment rate truly 5% or below, right? And these, you're kind of at the end of the cycle when you're in the 3% range, especially under 4%. Like, that's just ridiculous. Anything under 4% is just insane, okay? So when you have a great employment market matched with ridiculously low interest rates, the lowest that generations had really seen, is going to create a dynamic where ridiculous amounts of homes and apartments are built. And that could definitely hurt the home builders over the next few years, in my personal opinion, in quite a substantial way. And housing moves slow. So it's not like there's going to be a magical comeback from for those home builders magically overnight. The only way they make it through this mess and don't have a 50% plus drop is if we have no recession.